Hey, Mike Chadwick here, and today I want to talk about DSCR loans and the benefits of going to a DSCR loan program versus a bank loan program to fund your residential real estate investment properties. First off, it's a common misconception that borrowers use us simply because they don't have the credit or the financial wherewithal to go to a bank. It's simply not true. In fact, most of my borrowers have great credit, great liquidity. I have borrowers with 300, 500 apartment units. And in fact, they do go to banks at different times, but they come to us for a reason. And I want to make sure that you understand what that reason is. So in this video, this will be a summary of what I believe are the key benefits of going DSCR, and hopefully the start of a series where I'm going to dive into each one of these benefits in greater detail, so that you can understand exactly, again, why really experienced investors choose DSCR versus traditional bank-like sources. So first things first, before we get into the benefits, I definitely want to make sure everyone understands that DSCR loan programs are meant for real estate investors. We can't fund consumers or owner occupants. We can't fund your primary residence. We can't fund your vacation home or even a property that your kids live in. In fact, we'll go so far as to make a borrower form an LLC to own the property, and ultimately that LLC or a corporation will be our borrowing entity. So the human, the warm body, the investor will ultimately sign on the loan docs and be a guarantor on the loan, but our loans are made to an entity. It keeps the separation. It ensures that we're making a loan to an investor to the extent we can. We'll make you sign affidavits at closing saying you're not intending to occupy the property. But at the end of the day, we want to make sure that our DSCR loan programs are funding investors. That keeps us from having to worry about all the regulation and everything that the banks have to. And that allows us to work faster and more efficiently through the process. We don't verify your income. We rely on the property's cash flow. We rely on the rents the property generates, less taxes and insurance, to make sure that that net cash flow number pays our loan payment. It's called debt service coverage ratio. We don't always need it to be a positive DSCR, believe it or not. We can actually go below break even at times in certain programs. But for the most part, we're going to be looking at the asset's cash flow to pay the debt service payment. That's DSCR, debt service coverage ratio, and we'll get into that in future videos as to how it's calculated, what have you. There's no impact to your personal credit when you come to us for a loan. We are going to pull your credit. So I guess that's not 100% accurate. You're going to have to pull your credit once, usually every 6 months. We can keep it in the file and refer back to it. But the bottom line is that, yeah, we do need to pull credit. We're going to pull your background, but we're not reporting to credit agencies. So the loan being in your name, well, that goes away because we're lending to an entity and you hide behind that entity, and therefore, when you go to other banks or other institutions for different things, our loan's not going to come up on your credit report. It's going to be the obligation of the entity that was formed. So the bottom line is we're not impacting your credit score other than a hard pull to go through the process of obtaining a loan. Second, we're not looking for financial statements. We're not doing a borrower financial proctology exam on you. We'll ask for a bank statement that shows that you have 6 months of principal, interest, taxes, and insurance as an example, but we're not going to look at your net worth. We're not going to be looking at your debt to income ratios as an example. And what that does is, it allows borrowers to build a portfolio. We're not looking at all of your loan obligations, your contingent liabilities. We're looking at the asset itself. We're making a loan against that asset. It cash flows or it doesn't. It supports, our loan is supported by the valuer, it's not, and we make that loan. And I know borrowers with 6, 7, 8 million of DSCR loans all day long, and they have no problem going out and financing that second property. Whereas if they went to a bank, the bank is going to want to know what your loan obligations are. If they're all tied to you personally, well, it's going to continue to build, and ultimately you're going to have no ability to grow your portfolio. And when it comes to assets in your bank, when we talk about proof of liquidity, we're not looking for seasoning on those assets. So you can get the money in from a sale of a property today, show us a bank account tomorrow, and as long as you have liquidity in your bank account at the time of providing the statement, and you provide evidence that you control that statement or that account, then we count it. We talk always about speed. I mean, we're in the speed of money business. The loans are approved here in 2 days max. We're closing loans in 3 to 4 weeks. Banks are probably a week or two before you can get, I would say, even like a real term sheet that is based on your income and their review of your file and your financial condition. And then they close in, I'd say, 60 days, maybe 90 days in some cases. So, bank loans don't really offer much in terms of flexibility, and they certainly can prevent you from even getting into certain transactions just because of how slow they are. Forget about the fact that they have a lot more paperwork required, and so we might as well get into that too. We don't require tax returns here. We don't require, like we said, proof of income, proof of employment. We don't look at your balance sheet. I'm not looking at your schedule of real estate owned to see if your portfolio is cash flowing. We're looking at the asset. We're looking at the DSCR. We're looking at very few conditions as it relates to you personally. Again, personal credit, background check, liquidity statements, just very simple paperwork as it relates to you, the warm body of the real estate investor. And that's really compelling, because especially if you're self-employed and you don't want to show the income, you can't show the income, it becomes a much easier qualification process for self-employed borrowers. We talked about a little bit about credit, but credit flexibility is another thing. I mean, we can go down to 620 credit. Banks will simply cut you off. So, you might not get max leverage at 620 credit, but you certainly can do a loan with us. And quite honestly, speaking of leverage, we're going to be offering higher leverage on average than I believe a bank would. Banks traditionally are 75% leverage. We'll go 80, 85. That's just, again, one of the major differences. The banks aren't willing to take as much risk as we are. That's why they're going into that deep dive. They're lending deposits, right? They have the ability to offer you lower rates, but they're also offering you lower rates, and you're expected to prove out that your financial condition warrants their loan. And I think their criteria, at least now we're seeing, is very fluid. It can be frustrating going through their process. We know that. We think this program fills a significant void. And in the market right now, we're actually lower than bank rates, which is shocking to me, but that's just the banks being slow in terms of adjusting in the environment we're in. And I think our DSCR program is killing it for a reason. I mean, we just quoted a deal at 5.75%. I mean, it's unheard of to have a 5 handle historically, and we're there. So DSCR programs are built for speed. They're flexible. You could have perfect credit and still find a reason to go DSCR. Call me if you have any questions, text me, DM me, and let's go through our programs. It takes me no time to size and price loans. Hey, thanks for watching. You can follow me on all the socials at Mike Chadwick Jr. for Junior. I'll be talking all about hard money, private lending, DSCR loans, bridge loans, you name it. Anything related to investment property financing, you'll find it here. Thanks for watching.